Welcome to Casual Crypto Chats by Exo Ventures Consultancy. In this first video, we'll be discussing our latest blog post where we discuss Bitcoin historical analysis and develop patterns from the past bull and bear market cycles and add them onto the current bear market situation. Before we do get into it though, we want to add a small disclaimer. The data sources that we're using may differ from someone else's data sources. We're using Bitfinex's Bitcoin data on TradingView, and the specific values of the prices or percentages may vary depending on which source you use, but we want to focus on the overall pattern, not any specifics. And we also want to add that this video is for educational and entertainment purposes only. None of this is financial advice, and this is also our personal opinion and speculation, hypothetical situations. All right, let's get into the first bull and bear market cycle. Okay, so this is the first bull and bear market cycle. Let's get into it with the patterns. The top was in 2013 and the bottom in 2015. So the top was at $1,175. Now we're gonna look into this chart without focusing on the major almost 92% decrease, because that also recovered within the day, so we're gonna assume that that's a freak event. Okay, into the pattern. We have the top and then we have a big decrease of about 70%. This is the first phase. The second phase of the pattern is that we have a rally up of 99%. This rally also reaches the 200 daily moving average. You can see that on the chart with the green line over here. And it also hits the 38.2% Fibonacci retracement. Let me show you just on the chart so you can see it. Okay, as you can see, it hits the 38.2% Fibonacci retracement. So that's phase 2 of the pattern. Price continues moving down with the downtrend and the bear market, and then price forms an accumulation range. Okay, this range is important because it is basically indicating the end of the bear market. We have the top of the range at 77.5% down, and we have the bottom, which is at 81.25% down, with some deviations above and below. Now, what we want to focus on, obviously, in a bear market are the deviations below the accumulation range. That's where you want to be buying Bitcoin at the cheapest possible price to move forward into the next bull run. So the first deviation below was at 86%, and then price continued moving in the accumulation range. This is the first one. Price moved back in, and this is the second one, which was also at 86%. And after these two deviations, price did in fact get back into the range and then break out of the range to end the bear market and start with a new bull market trend. Okay, now we have the first bull and bear market cycle done. Let's add a cleaner chart with the pattern so that you can have a better understanding of what we're talking about. All right, we have the top as the first phase, the move down towards 70% from the top, a rally into 99% up, hitting the 200-day MA and the 38.2% Fib, in a downtrend, so price continues moving lower. Then we form an accumulation range with deviations above and below, with the major two deviations below being the buying opportunities that we're looking for, specifically these around the 86 to 82%. All right, that's the first sign of the pattern. All right, so the second bull and bear market cycle had a top at about $20,000, which was followed by a big 70% down move, which is indeed phase 1 of the pattern. Here you can see the down move was pretty deep, and then followed by a rally into 95% rather than 99%. And this one also did not hit the 200 daily moving average. As you can see by the line here, it went well above it. But it did hit the 38.2% Fibonacci, as you can see here from the chart. It hit it right over there. Now let's continue with the pattern. Price is in a bear market, so it does continue moving down and then breaks the infamous 6,000 into the accumulation range. Now this range was also between 77.5 and about 81.2% from the top. And the two major deviations are the ones that we are looking for again within the pattern. These are the buying opportunities, which were around 84% for this cycle. They were actually at 83.88% from the top. And these are the ones you want to be looking for when you are investing. Okay, now as you can see with the second bull and bear market cycle, history does not exactly repeat itself, but it does often rhyme. So the pattern is almost exactly similar, but there are certain differences that make it not quite so. For example, that the second one does not hit the 200 daily moving average, but it greatly surpasses it. Let's again recap with the simplified version of the chart. Okay, let's go again. The top followed by minus 70%, rally into 99 or 95%, 200 EMA, and Fibonacci retracement. Downtrend continues, price moves down, forms an accumulation range, 77.5% to 81.25% from the top, and then our beloved babies and investing opportunities, deviation down 1, deviation down 2. And that's basically it for the chart. Alright, so now that you have the clean version of the chart in your head, it's fresh in your memory, let's apply it to the current bear market situation. But also keep in mind, history doesn't repeat itself, it rhymes. So even though there are differences, the overall pattern is very important to see where price might develop in the future. Let's get into it. Okay, so for this current bear market situation, the top was at around $69,000 in 2021. It was followed by a very steep decrease into the $17,000 area, which was a 74% decrease. Not a 70, but 74%. If the pattern is to resume, then we would have a rally of 99 to 95% up into the area, which was also the 200 daily moving average and the 38.2% Fibonacci retracement, as you can see here on the chart. It's the orange line. So the orange area might be our relief rally zone. Then following the pattern, the downtrend continues and price resumes its move downwards. Then eventually we will reach an area of an accumulation range forming between 77.5 and 81.2%. The first move down would also then happen and then continue within the range, and then we would have our second move down into the buying area for the bear market. After this cycle would be complete and we would be moving into the new cycle. Right, so do you see how it's possible that the pattern might be applicable to the current bear market? Now, let's discuss some specifics. In the first bull bear market cycle, the retrace and the bottom of the bear market was at 86%. In the second bull bear market cycle, the retrace was at almost 84% at 83.88% from the top. Now, if we assume that it's going to continue with diminishing retraces, what I mean with this is that each retrace is slightly less, then the third cycle, so the one we're in now, might have an 81.3% retrace from the top. And if this is the case, then the bottom of the range might already be the bottom price of the bear market. However, assuming that we do have an 86% retrace again, like in the first cycle, then we can be looking at prices of $9,600 or below 10K Bitcoin price as a bottom. So, now that we've gone through everything, what do you think of the pattern of this analysis? And if it does end up happening, are you prepared for it? Are you excited to be able to buy Bitcoin at these bottom prices? Let us know in the comments. We would love to hear your thoughts. And be pending for the next video because it might have something to do with the following bull and bear market cycle as well. We look forward to seeing you in the next video. Have a great day.